Awesome. So we're going to kick it off here again. We have a number of three incredible individuals in the buy now, pay later space that are joining us. It's a fast-growing space and an exciting space as well. For introductions, we have Roland Nasser, who is the CTO at QuadPay, a US-based buy now, pay later solution that was recently acquired by Zip for $269 million. Congrats on that, Roland. We have Hussam Arab, who is the CEO of Tabby, a MENA-based buy now, pay later provider that recently raised $23 million in the largest Series A round of the region, or one of the largest. So congrats, Hussam. And we also, last but not least, of course, have Basil Muftah, who is the general partner at Global Ventures, which participated in Tabby's Series A as well. So Basil, Hussam, Roland, thank you for joining me.
Thank you.
Awesome. So we'll kick it off in 30 seconds here. Roland, Hussam, for the audience that don't know what QuadPay or Tabby is, or the buy now, pay later space, in 30 seconds, please introduce the audience to what QuadPay. We'll start with Roland first, and then what Tabby is. Roland.
Sure. So QuadPay is a US-based buy now, pay later platform, and what that means is essentially we do what I like to call digital layaway. So we allow people to make purchases online or in store over a 6-week period. So we essentially allow them to make that purchase up front. We essentially loan them the cash for that purchase, and then we take 1/4 of that purchase price every 2 weeks. So over a 6-week period, they pay us back, and we essentially allow them to get the goods right away. So it's good for consumers. It's also good for merchants. It allows new consumers to use those merchant websites to make new purchases that normally they wouldn't make, increases average order value, and that's essentially it.
Thanks, Roland. Hussam?
Yeah, so obviously very similar in terms of the solution itself. I think the adaptation that we've done for the region is we provide 4 payments over a 3-month period, i.e. Split into 4. Reason being, people in the region get paid monthly, not every 2 weeks. The other kind of difference I would allude to is just the driver for buy now, pay later in our region was slightly different. So aside from the convenience that a typical buy now, pay later solution offers, which is financing or convenient payments for customers, we're really trying to provide merchants and customers with an alternative to cash, which is the predominant payment option in the region.
Thank you, Sam. Thank you, Roland. I think my next question is, what's the pain point that the buy now, pay later solution solves for? And we'll go with you, Hussam, first.
Yeah, so I think I kind of mentioned it, but just to delve deeper into that. So typically, buy now, pay later, what the traditional players globally have solved for is working with retailers to offer their customers flexible payment solutions. And there are many ways in which they could do that, either delayed payments, as in kind of pay in full in 14 or 30 days, or split your payments into multiple installments. So that's typically how it's been structured. I think for the region as well, we're looking to provide merchants with is an alternative to very dated payment methods that have caused a lot of pain, both for merchants, for the overall kind of e-commerce ecosystem, and I think governments alike, right? As across the board, cash has been dominant in the region. And up until now, there really hasn't been an alternative to drive people away from that. So I'd say that these are the two kind of key areas. For merchants, as Roland said, what we are providing is that ability to upsell customers and convert them better. And I think over time, as one scales the business, you also become a source of traffic and a source of customers for these merchants that you work with.
Thanks, Hussam. Roland, I heard Brad and Adam, founders at QuadPay, also talk about the pain point a few times, especially from a credit card perspective. I'd love for you to kind of take a go at that. So what's the pain point that kind of QuadPay solved for, especially with the huge credit card kind of issue going on in the U.S.?
Yeah, I think in the U.S., credit cards have gotten a little bit of a bad name. A lot of the underbanked in the U.S. and a lot of people just don't have good credit. It's pretty difficult for people to maintain a good credit score in the U.S. without retaining some sort of debt. And for a lot of people, that's just not an option, and that's not something that they want to do. They don't want to have to maintain debt in order to build up a credit history. So for QuadPay and many of the buy now, pay later folks that run here, it's really about serving those people that A, don't want to be in debt, and B, just don't want credit cards. Some people just don't trust banks either. And so being a technology company that has a little bit more trust than a traditional bank might have for these individuals has been a real key differentiator for us.
Thanks, Roland. Basil, you're an investor in this space, participated in one of the largest Series A rounds in the region. As an investor, what triggered you to kind of go in the buy now, pay later space, and where do you see the future of the buy now, pay later space going?
Well, first you have to look at it as the consumer lending space in general, right? And you got to look at what's happening in that area overall here in the region. Talk about Middle East and North Africa and all of Africa for that matter. There's a huge number of people who are underserved when it comes to consumer finance and lending options. So in a general, that's a space that's very attractive. Now, buy now, pay later really goes to the customer experience, because one of the things that we sat to, thinking about a lot is this a feature or is this a product? Is this a feature that gets provided by different banks, institutions, or is it a product that requires an entire new organization to be set up around and to be built around? And what what I think Roland already expressed, and Hossam, and in different ways, is that consumers do have a bit of apprehension about taking credit loans from banks, and have an apprehension around the process that it takes to get financing. So if you're at this, let's say you're at the toy shop or you're at the furniture shop and you're really looking forward to buy, something for your kid or something for your house, and it costs just a little bit more than what you can afford on a typical monthly payroll. Buy now, pay later needs to be this seamless experience that happens quick, that allows you to break up that payment over a number of payments really quickly, and you can purchase what you want and go home with it and be happy and kind of impulsively enjoy what you've got. And so we do see it as a product. COVID was definitely an acceleration. So we saw how COVID just changed a number of behavior. So that was one of the other things that we were looking at in terms of consumer financing and what's happening. I don't think Hossam was ready for what happened during COVID, right, Hossam? I think it was overwhelming how quickly things picked up. Roland, I don't know your business that well, but I'm going to assume you had the same experience through the pandemic, where people were, buying home office and all of a sudden spending $1,000 or $2,000 buying new furniture, screen TV or whatever, and they again need to be able to afford that without having to fill out tons of forms and applications and get into a very traditional lending model. Now, we do believe the model is here to stay. I think it's something that will continue to evolve. I think there's still room for experimentation between 6 payments every 2 weeks, or 4 payments over 4 months or 3 months or whatever it is. There will be different models and levels and loyalty programs built into it. So I expect the products that we see in buy now, pay later to evolve and become more sophisticated and become, hopefully, a preferred method for lots of consumers who really live paycheck to paycheck, right? And need a way of being supported without having to be treated as credit customers, even if it's a credit facility.
Yeah, awesome.
One thing I'd add to this, Basil, is just when we try to look at who our customer is, it isn't always to try to solve this cash flow issue, right? I mean, it's not ideally it's not the customer that absolutely needs funding or financing and is living to paycheck, what we're trying to solve for in the long term, and I think this is where the solution really sticks and becomes just there to stay, is where this is just becomes one of the most convenient payment solutions out there. Right? It's more convenient than a credit card. It's more convenient than a debit card. And for me, it's just becomes second nature to pay this way, as long as you're taking care of how the payments go out.
Awesome. Basil, Hussam, I like that you mentioned that kind of transition to controversial part of the conversation here. This was just a warm up. Recently, as you probably all know, the UK Financial Conduct Authority asked to bring in stricter controls for interest-free buy now, pay later solutions. They're asking providers to undertake more comprehensive affordability checks before lending. Advocates of that decision claim that the buy now, pay later solution is a creative marketing tool in an attempt to encourage people to purchase things that they can't afford and often they don't need, by removing some of the pain of paying. We'll start with Roland here. What are your thoughts on that claim, and what is QuadPay doing today to protect consumers?
Yeah, so first I'd like to point out that regulation isn't always a bad thing. It does definitely stifles innovation in some cases, but it's not always a bad thing. I mean, there's a lot of players out there today in buy now, pay later. The space is growing, and we all want to make sure that we're doing things to benefit our consumers and not to hurt them. So financial health and financial well-being is a very important topic that we all need to address. We don't want to be predatory lenders. We don't want to create a platform that enables people to go off and buy things that they can't afford. And so that's where we're really looking into at QuadPay. We're trying to provide some education to consumers on this financial health and how to save for these purchases, because ultimately we are sort of selling the dream that you can afford these things that you can't might cost 4 paychecks, but is that the smart move? And so I also want to comment on the assumption that rigorous checks aren't being made. We're fortunate enough to be in sort of a time in the world where information is readily available. We can make very thorough checks on people's credit histories, on people's buying behaviors, on people's spending behaviors, and other behaviors that might be indicative towards their ability to pay back. And we can do that in a very fast way that traditional lenders may not have that ability, or that's just not the way that they do that. So I do think that we are operating a business. We do have to reduce losses, and we have to ensure that our customers can pay us back, and we would never try to make loans out to people that can't pay us back. And for QuadPay specifically, our average order values are in the hundreds of dollars. They're not very large purchases. They're all small purchases, and it just gives the ability of people of spreading those out over paychecks. So that's our stance, and we're starting to double down on that financial health and well-being as part of our platform, and really use it as an educational tool.
Amazing. Thanks, Roland. And you touched on and I'm assuming these are third-party partners that you kind of pinpoint and use their APIs to kind of measure kind of the credit worthiness of these individuals before lending them. You don't want people to kind of dig a rabbit hole. My question to Hussam is, one, would love to hear your thoughts on the claim I mentioned, but two, given the kind of the freshness of the region, do you have such a third-party support? How do you today kind of measure that credit worthiness of a consumer before lending?
Sure. So yeah, and just on your previous point as well, Tafi, I argue that credit cards are probably more predatory than BNPL in that regard, right? In the sense that you have a limit, you can continue to spend up until that limit, and if you don't pay back, and especially if you're paying back your minimum payments every month, then you're allowed to continue spending while you rack up debt and interest and so on. As opposed to buy now, pay later, where our risk appetites are actually much smaller. The reason they're much smaller is because we're making our revenue from the retailers, where our margins are actually quite small, as opposed to an APR that is quite hefty on the credit card side. So, I think from that regard, it is down to us to work with the regulators and ensure that they understand the differences between what we're doing and what the credit card companies are doing. And I think it is down to us, as Roland said as well, to educate the customer and make sure that they're not overburdening themselves. With regards to the data that you mentioned, so absolutely, I think this region is still quite early in terms of the availability of the data. The credit bureaus are more set up as revenue-generating businesses than they are as a public good, and so they're not affordable for companies like ours, and therefore we need to look at alternative sources of data that may not be as useful and as effective to score customers' risk. Having said that, again, the basket sizes are quite small. People are making relatively small loans, and you are able to predict behavior fairly well when people are making small purchases as opposed to large loans similar to mortgages and personal loans and so on.
Amazing. Thank you, Roland. Thanks, Sam, for that. Basil, I'll move on to you. Do you see, as an investor, what are some of the risks that this space could face? Could regulation affect the user experience? I know I use QuadPay, and I know you touched on the user experience. You want this to be a fast checkout. I know Tabby is doing a great job in kind of providing that seamless integration. But do you see regulation affecting that user experience and that quickness?
If you're talking about regulators here in the region, you have to actually get down to the specific country to be able to speak about. They're all in different stages, and they're all evolving fast. What they do have in common, and I'm talking about the major countries right now: UAE, Saudi, Egypt, Bahrain, to also to a large degree, is that they've all very clearly indicated that their kind of positive outlook on allowing fintechs to flourish, right? So, but part of it is also them learning, right? And part of them is going through the educational process. So I'm willing to bet, if you speak to any of the fintech founders, Hosam being one of them, a lot of time is going into not only applying for a license or applying for regulatory approval, but actually educating the regulator on different aspects, different models, and so on. And I think their willingness to listen is the best that we've seen in the last decade. Let's say it's definitely a lot more open-minded. Just the fact is that many players have now achieved licensing status or graduated from the sandboxes and so on. So to answer your question, of course, the regulator can always come in with let's say not well thought through regulations that could impact any one of the fintechs, buy now, pay later being an example, on the short term. But I do believe the overall stance of the regulator in the region at this time is quite positive and moving in the right direction. I guess it's a balancing act, right? How creative does Hosam get with his products versus how much they're willing to accept and tolerate at the same time, and there will always be a little bit of tension, but it's moving in the right place. I guess the one last bit that we're all waiting on, quite impatiently at this point is the open banking part, right? Once that's kind of resolved and you have the ability to kind of access people's data and banks and have that ability to, just the same way Bahrain has taken the lead on it in the region. Once that's cracked, I think then, kind of the floodgates, if you like, of fintech just open up quite significantly.
Amazing. Thanks, Basil. Back to Roland and Hosam here, bringing some sunshine back into the room. I know I took it to regulations, but Roland, what is one experience that you had at QuadPay where you were like, this is the reason why we do what we do. This is the reason why I come to work every day and lead a team of 40 plus engineers, or maybe more than that now, to do what we do?
Yeah, it's an interesting question. Let's see, it's been about a year and a half ago, we launched what we call QuadPay Anywhere. And QuadPay Anywhere is essentially what we have as our mobile app. And we can issue a virtual Visa card that you can use to use QuadPay anywhere. So I can walk into any store. I can do whatever, go to any store. It might not be a store that we have a relationship with. And we started to look at the spending habits of individuals using that, and we started to realize that people were using it actually to pay bills. And it was a very interesting use case that we didn't really anticipate. And so we've done some user research and interviews with those users, and a lot of people are very thankful. They say sometimes maybe have just lost their jobs and they're not able to get a loan, and they don't want to go to a traditional lending. And so just giving them that availability to go out and pay a bill, go to the grocery store when they need to, that's something that really warms our hearts and makes us really happy to do what we do.
Amazing. Hussam, you're the founder, Tabby, leading the way in the region. What's one experience or maybe a set that really gives you that fuel to keep going?
I think enabling small businesses to thrive and start growing, right? So one of the stories that we were told recently by one of our merchant partners, they sell coffee beans and coffee machines, right? And before partnering with Tabby, 95% of their revenue was driven by coffee beans, and for them that wasn't very effective in terms of customer acquisition and so on, because you're acquiring a customer for quite a lot of money, and at the end of the day, the revenue generated from that customer that's buying coffee beans is not a lot. So once they launched Tabby, and very, very quickly, that share shifted or completely switched, right? So 85% of their revenue became coffee machines, and the remainder was coffee beans. And for them, basically, the real switch there was the cost of acquiring a customer to buy a bag of beans was exactly the same as acquiring. It cost them to acquire a coffee machine, right? So a 4,000 dirham purchase and a 40 dirham purchase cost them the exact same thing, right? And for them, that just changes the business completely, right? It all of a sudden, this business becomes profitable because they're able to acquire customers at 4,000 dirhams a pop, right? So really, that's one example. But these small businesses that are able to change the way they do business because of a solution as simple as this really energizes us, and these stories keep the team going.
Amazing. Thank you, Sam. There's a quick echo there. Basil, my question to you is, do you wish to see Tabby, I know it's a bit early, but do you wish to see Tabby go for an IPO like Anghami did, or an acquisition?
Well, that's really up to Sam. He's the driver, driving the seat. And we believe in global ventures with the CEO, and you put your effort behind them, both in capital, but time and support in all the ways that we can. I will say this though, and Hussam and I spoke about this I think it was a week or two ago, and I think it's worth noting. It's incredible to me how quickly this space has gone from, what is BNPL to, oh my God, how many BNPLs are there exactly? And not only in the Middle East, which again usually doesn't move that fast, but we've seen a number of players. I count 5 or 6 minimum already that are kind of at some sort of scale. Let's not even talk about the ones that are at idea stage. There's maybe another half a dozen of those. And I'm sure for Roland it's the same. The US and other places have this space attracted competition quite quickly. And I do believe that changes the dynamics of both fundraising, scaling, and exit, and the way you do that exit, if you like. It requires a bit more reflection around, how quickly do you raise capital? How much more capital will you need to be able to reach a certain level of market share or dominance, if you like, to be able to be a valuable business? Should you do acquisitions, along the way to just keep things accelerated? I think this is going to be one of those sectors that from, birth to consolidation, if you want to call it that, is going to be, or exit or whatever, is going to be one of the fastest that we've seen in recent history.
Amazing. Thanks, Massive. And I like that you touched on that, right? There are multiple players, and here, even in the US, maybe also in the MENA region, you guys are seeing this. We go to online stores and we see multiple buy now, pay later solutions on the payout. My question we'll go with Sam first and then Roland is, given that there are different players in the market, a merchant can put different BNPL providers on their checkout. What's next? So what will differentiate these buy now, pay later? So how will you guys kind of differentiate Tabby and differentiate QuadPay?
Great question. And yeah, so we've seen that already take place in other markets, and I think these are markets where the space has matured a little bit more than it has in this region. So my view is it may make sense for a merchant to do this once you have 2 or 3 players with a significant share of the market, i.e., I bring with me my customer base of a couple million users, and someone else does the same thing, right? At that point of time, it makes sense. In a relatively early market like ours, and I'm obviously biased, but I'd say it really doesn't make sense. It doesn't make sense to have 2 or 3 players confusing the customer at checkout with a relatively similar solution, and where the brand recognition is still not there. So that's kind of my perspective on that. I think how we differentiate is definitely top of mind today, because where we don't want to differentiate is on price, and that's where I think things tend to go in our region faster than they would in other markets. Is our typical merchant or business is extremely price sensitive, and in many cases they're looking at price before they look at product. And so what we don't want to happen is where it does become a race to the bottom very quickly. And this is a very short race to the bottom, right? We're talking about a single-digit commission rates. So that race to the bottom doesn't last very long. And so it is important for us to build differentiation. And there are many ways in which we can do that. But I think investing in that brand and ensuring that customer relationship is there and lasting, and there's a reason for that customer to use you versus someone else. I think that is what lasts in the long term, as opposed to the best price that you can offer a merchant.
Amazing, thanks, Sam. Roland, how does QuadPay differentiate itself? I know, being part of QuadPay previously, but I want you to share with the audience. How does QuadPay differentiate?
Yeah, I mean, I do agree with Hussam about brand equity and building a good brand that people can trust. I think that's really important, and that's something that we feel that we've done. There are a lot of players now, especially in the US, and buy now, pay later is getting to the point where it's becoming ubiquitous. It is becoming a standard payment option. I think a year ago, even 2 years ago in the US, it wasn't really a very well-known platform. But now it's getting to that point where it is, and we all need to differentiate ourselves. And I think we look to ourselves at QuadPay. We have two customers. We have our merchants, our merchant partners, and we have our end users. And so with our merchant partners, we've differentiated ourselves by our ease of integration. I think that's been something that has been really helpful for us. It's just a matter of how easy the platform is to integrate into their platforms. We've done some innovation there using some of our virtual card technologies to do that, and that has helped us push things forward as merchants look to integrate more of these platforms. If it's going to take a few months for them to build it into their e-commerce platform, it's not going to be valuable to them. And so apart from that, also on the merchant partner side, it's approval rates, right? Who's approving more customers, more the correct customers, and that's another sort of dial that we can use, and it's a way that we also feel that we can, and also help out the end users as well. So if that user is going to the checkout and they're getting declined, on other platforms, it's not a very good user experience for them. And as we talked about earlier, we're not trying to be predatory lenders, but at the same time, using various different types of data feeds, using machine learning, using other technologies that can increase our confidence in that user's ability to pay back, allows us to differentiate ourselves by approving more customers. And then we're not only a payments platform anymore, we're now a shopping platform. platform. So now we're also a distribution vehicle and a marketing vehicle that'll allow people to discover new products, discover new deals. We're a financing app. So adding on all those new features has really set us apart. And that's the area that we sort of see things start to shift. In the US, we are starting to see multiple buy now, pay later platforms being set against each other, competition. And really all of this started in Australia, and that's where our founders are from. In Australia, it is common now to see multiple players operating in the same space, and it is a nice cohesive environment where the customers basically have their preferred payment method, just as we have Visa and MasterCard and Amex today. You have your preferred partner, and that's who you go with. So
awesome. Thanks, Roland. We're a bit over time here. I've been chasing moderators all day and be like, hey, don't go over time now, we'll go over time. But I want to end it with what's one key takeaway that you want the audience to leave away with? And we'll start with Basil here.
I think that, if you're going to get into fintech, you better move fast. It's expanding very rapidly. It's an industry that's coming into its, prime time period, I guess. And there's a lot of fierce competition around talent, about knowledge, and about capital for scaling. So this isn't a space that's very for the faint-hearted, if you like. That's my message to entrepreneurs. And for investors, let's try to stop inflating the valuations on every single fintech that's out there, because we're making it difficult for ourselves in the long term. But nonetheless, these are very worthy companies, very big value, big potential, and I'm really excited about what Roland, Hussam, and many other fintech entrepreneurs are building.
Awesome, thanks, Basil. Hussam.
Listen, I think from where we are today, I'd probably say for anyone looking at a space that is starting to get really heated, buy now, pay later is definitely one of them, is really look at how you can differentiate. I mean, I think we're seeing way too many cookie cutters in this space, but in other fintech verticals as well. And it's just not a sustainable strategy for anyone to try to do the same thing and then try to compete on price. At the end of the day, you do need to differentiate. You do need to build some sort of moat that sets you apart from the rest. And if you can't do that, then look for something else where you can.
Awesome. Thanks, Hussam. You guys, you guys are available in the UAE and Saudi for consumers?
UAE, Saudi, and we are currently beta testing Kuwait and Bahrain.
Perfect. So if you're a merchant, have an e-commerce store for consumer, check Tabby out, TA. Give
me a call.
That'll be why, or give Hussam a call. And then Roland, last but not least, what's one takeaway you want the audience to go out with?
Yeah, I mean, don't be afraid to be disruptive. I think any industry can be disrupted. If you look at the credit card industry, buy now, pay later is a disruption to that industry. It's been something that's been the status quo. It's an area of innovation that we're all playing in, and we're all starting to win in, and it's a very exciting space to be in.
Awesome, thanks, Roland. And Roland, your QuadPay is US based. And
we're US based, yeah, but we're part of the Zip network. As we got acquired by Zip, and they're expanding globally right now. We're available US, Australia, New Zealand, UK, and we have some strategic partners in the MENA region as well. Spotty being one of them.
Awesome, thanks, Roland. And Roland, Hussam, I'm assuming you're both hiring for engineers, growing the teams. So if you're an engineer in the audience, check their careers pages out. These guys are going big and looking for
and data people.
And data people, yes, check them out. Just want to make sure that's covered. Awesome. Well, Roland, Hussam, Basil, it's been an honor. Thank you for joining Really Techquaddy this year and for joining my panel specifically. And for
Thanks so much, Sophia.
Thank you, Tafi.
Take care. Thanks, guys.
Have a great day.
Bye, guys.
You too.